And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, and welcome to the Market Prep. Friday, May 5th. Happy Cinco de Mayo, everyone. Hopefully, if you're in the markets, things are going your way already. Thanks for trusting me with your time on this fine Friday. Of course, we're going to be focusing on seeking accurate context, always thinking about risk management, patience, and as Joe D says, harmony. It would be nice to be in harmony with the markets today, right? Well, unemployment day is here. The numbers are out. Kind of a muted response, if you ask me, this morning for the numbers that did actually come out. Non-farm payrolls, they were looking for 180,000 new jobs. Came out 253,000. Private non-farm payrolls, they were looking for 160,000 new jobs. That came out 230,000, and the unemployment rate drops to 3.4%. Even the participation rate was a little higher than expected. So we have the markets responding to those, digesting those numbers now. The real question is, what are the longer time frame? What are the regular trading hour traders going to do with these numbers, with this information? Only time will tell, and as always, anything can happen. ACH, that's one of our acronyms here on the Market Prep. So U.S. stock indices are recovering prior to and since the NFP and unemployment rate. Some pretty positive earnings from Apple last night. Maybe that's helping things a little bit here. But again, there's still lots of uncertainties out there. One of the major ones that we keep hearing about and keeps creeping up on us is the fear of the cracks in a lot of regional banks and the banking system overall. It kind of remains a thorn in the foot of investors and traders around the world. Crude prices have recovered to over $70 a barrel, but still on course for a pretty deep weekly drop this week. So we've got just a few days, a few minutes here to finish up this week's chapter in our yearly trading book, with the VIX down almost 6% this morning last I looked, 18.92 where it was 19.42 yesterday at this time. The dollar index, 101.39. It was 101.4 yesterday. No major changes in the U.S. dollar in the last 24 hours. And the yield on the 10-year spiked up a little bit after these unemployment numbers. It's 3.45%, where it was 3.37% at this time yesterday. A little jump in the yield on the 10-year after the unemployment numbers came out. So, as always, I ask that you hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here on the Market Prep. Everything we do here, and just make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Good morning, everyone. I've got Brian first in the room winning the prize. Will, good morning. My brother Rick is here nice and early this morning. Good morning, Rick. I love you. Scott saw and he conquered. Will missed it by that much. You get it next week. Haggle Matters, good morning. Dan Trader, good morning. Shaw, good morning. George Lacey says good morning to all of you as well. Good morning, Joe. Harmony. I love those single word inspirations that you've been coming up with, Joe. It's great always to have you here with us. John, good morning. Henry, Vince, good morning. Bill Phillips, Vince saying happy Cinco de Mayo. Have yourself a taco and a margarita this evening. Make it 2. George Duque, good morning. Charles March, Jason, Stephen, Mitchie from Spain. Happy Cinco de Mayo. I don't even know if you celebrate that in Spain, but we're glad you're here. Thanks for the love. Shy T, good morning. Gnostic, Travis, good morning. Me, or is that Miami? Happy Friday to you as well. Just cue me. Hey, everybody, the sizzling hot numbers are in, and they are hot. I wonder what the Fed is going to be doing with this information. Vlad, good morning. Anissa, always good to see you. Timothy, Austin, market prep is the most useful thing I've ever done for consistency. Love waking up in the morning. Hey, Austin, very nice of you to say. Nice. Thanks for popping in and for the good thoughts there. Thank you very much. I mean, that's really the goal, right? Is to be prepared for the markets and and again, always remember thinking about risk management, right? Good morning, Sarah Hall. Cheers and love and a couple of beers to you as well. Robert, good morning. AK Rooster, hey, where you been? Haven't seen you in a little while. Got a new chicken. Hey, congratulations, Rooster. You've got a little chicken hawk. I'm a chicken hawk and you're a chicken. That's great. Congratulations. Well, that's fantastic, Rooster. Thank you for sharing that great news. Everybody's happy, healthy, feeling good. That's great, man. That's awesome, Rooster. Nice crow, right? Justin, good to see you. Love my regional bank. Greatest bank ever, Northern Trust. And regional bank, right? James, Jason, good to see you this happy Friday. Everybody saying congratulations to Rooster. Chad, good morning. Paul, happy Friday. Yeah, Rich. Travis, Rooster, everybody, we're all very happy for the Rooster. Taurus Trader, Rusty Golfer. Had a great coaching session with JD Senior yesterday. Excellent. Thank you for letting me know. I will let the fine gentleman know that you were talking about him there today. 2 tacos, 2 margaritas. There you go, Shaw. Marcelo, good morning, everyone. Ponzi Zombie Killer, good morning. Yeah, you got to take a break, right? That's a big deal, man. That's just awesome. New trader in the family. That's right. That's right. That's fantastic. That made my day, Rooster. That made my day. I remember, when my kids were born, those were some of the 2 of the best days of my life, right? I got 2 kids and just loved them to death. They're Sarah is 25 now and Luke is 23. And they tolerate us. They tolerate me, probably. But it's such a blast. I enjoyed every minute of my kids. I'm so excited for you, Roost. I don't even know if you have any other kids, but it's always fantastic. Great news. Good morning, Alfred and Pete. I don't even feel like doing this now. I'm just so excited for you, Rooster. I'm excited for all of us. Every morning I wake up and I think, I can't wait to get and sit down and take a look at the markets and spend time with you guys. I feel so lucky to do what I do. It's just I don't even know what to say. A 2-year-old boy as well. Well, you got a buddy now. My daughter was almost 2 when my son was born. And it was so fun seeing, watching them meet. Well, we're all very happy for you, of course, Rooster, and we'll go take a look at these markets and see if there's anything that we can point out as far as nuances are concerned, or more important nuances, ruling reasons for opportunities. We'll take a look here right now. I just tickled, Rooster, for you and your little family. All right. Oh, and thanks to Casper yesterday for joining me for Make Hogue Money. I thought it was, it was very interesting. It's always great to get another perspective, and Casper's a good trader from what I understand, and we didn't do so well, but that might have been on me. And but it was great to have another trader with us yesterday and Make Hogue Money. All right, so what are we doing today to make money? Well, here's the S&Ps. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, we tested weekly kickoff high. Yesterday, we tested weekly kickoff low and last week's low. So where are we today? Well, we're back in range. We've shown a sign of rejection of lower pricing here. The market has recovered from the that it took for 4 straight days. But, how did the market perform in these 4 straight days? I don't see that it performed very well. 3 out of the last 4 trading days, we had some rather substantial losses in open interest. On Monday and Tuesday, we lost 14,000 and 17,000 respectively. Wednesday, we added a little bit of open interest of 4,300, but yesterday on this push to the downside, or attempted push to the downside, we lost open interest again. What do we do as far as volume is concerned here in the New York Stock Exchange? 4.9. So we did bring in a little bit of volume yesterday, but that may also be kind of a function of a reversal, maybe? Hang on. Got to record some of this stuff here. So we're getting a pullback. Well, it makes sense. I mean, we've come a long way in a short period of time. So April was a very narrow range month. We've already traded above and below last April's range in 1 week. I'm finding that to be kind of interesting. It's an outside month already, and it's the 5th of the month. We've tested weekly kickoff levels. We've tested last week's high and low, and we're headed back towards the middle. So looking at the auction to the downside, I don't think that it performed all that well. Now we've got a little bit of a reversal here, right? Well, we'll see if that reversal continues. Largely yesterday, losing 4,000, looking at that as somewhat inert, as somewhat, I don't know, the market didn't bring new business down there. It took out old business. What about the 30-minute chart here? Okay, overnight inventory is certainly long. It looks like we're going to be opening in the gap that we left from Wednesday to Thursday. Large probability of potential repair here, where we can trade to a point of control here, we can trade to a point of control up here, filling in this gap. There is a high volume node here that looks interesting, and another high volume node, of course, the point of control from yesterday down here. Overnight inventory long. The news is out. We've seen the knee jerks. That's now out of our system. What are the longer time frame traders going to be looking for? I am going to be probably hawking Delta pretty closely for the first hour or two today to see if I can sense any kind of divergence. I'm still looking for longer time frame traders to adjust inventory down near these lows. Weekly kickoff low. We saw it happen this week against the high. Longer time frame traders took off some longs. And then we had the downside auction, which again did not perform well. I would be looking for longer time frame traders to come in and buy this at this level, but we don't know how they're going to digest all the news and uncertainties out there. So I'm going to be looking possibly at an opening range opportunity because we are out of balance from yesterday. Market is largely out of balance. I mean, we got 2-day balance here that, again, did not perform all that well. Well, you're going to be looking for the salt shaker and some limes. Going to Margaritaville today. Well, what's the TPO chart look like? Dennis, I don't know what comment you wrote the other day. Don't worry about it. Don't worry about it. So here's the profile from yesterday. Very even bell curve. Prominent point of control. If that gets left behind, that'll be a sticking point or a visual point. And market, when we see these even bell curves like this, the market is likely to seek new levels to facilitate trade. That's the job. That's the job of the market, right? Is to facilitate trade. It's a normal variation, neutral day, already seeking new levels to look for opportunities to facilitate more trade. So I'll be looking, at a potential repair point of control to point of control today. It'd be a pretty substantial range, but it is unemployment day. But I think that the reaction to unemployment was relatively muted. What about crude oil? What's crude doing here? So yesterday's overnight aberration and a lack of open interest change yesterday, only adding 700, makes this look like a pretty excessive low, an excess low. Market already kind of recovering from this route that it's been in for the past 3 days and returning basically back to weekly kickoff low, which is 40.78. We got, 70.90. Sorry about that. 70.90. Well, 70.81 is our high right now. This may actually end up being somewhat resistant. It got walked through on the way down. Coming back to it might offer opportunity, and at the very least, gives us the chance to limit risk. Take a look at the 30-minute chart here. I don't even know what I'm doing. Hey, Leo, congratulations. Great job, man. Thanks for letting us know. Always love hearing about success stories. Nice job. We're looking forward to your continued success. Overnight inventory is long. We've opened with a gap. There's been an attempt to close the gap that has not been yet successful. Be careful looking for longs if we get too much of an overnight inventory adjustment. But again, not closing the gap is information we can use. We're up against the weekly kickoff high. This whole area here looks like an interesting area for an execution on the gap close or without the gap close. And then again, up above here at weekly kickoff high. But the market is opening in a previous gap, which may lend towards repair. Point of control to point of control. All right. And NASDAQ, always a little different than the S&Ps, holding up very nicely compared to the S&Ps. I mean, we tested last week's low and weekly kickoff low yesterday in the S&Ps. We haven't come anywhere near that in the NASDAQ. So the NASDAQ is still really in balance and centrally located inside that balance. We've been kind of stuck in this area right here for 3 days. Volume was good yesterday, holding up. We increased open interest by 2,400 on a push to the downside. Maybe we got a little bit too short, it looks like. Take a look at the 30-minute chart. Overnight inventory, knee-jerk reaction to the 730 number here. to the upside, now to the downside. Again, no gap that we're in here. We didn't gap yesterday. Well, we did, but we closed the gap in the NASDAQ where we did not in the S&Ps. Again, another reason the NASDAQ is presenting as stronger. But again, between points of control here with an overnight inventory, I may look for an opportunity for a long. If we get near this point of control, I may look for an opportunity for a short up at this point of control, if only for the reason that gives me the opportunity to limit risk. What about gold? So the auction to the upside in gold was good this week, right? We added open interest almost every day this week. We added another 18,000 yesterday. Maybe some of that was coming off that high, right? Maybe we grabbed a few shorts. This move to the downside is this just about the unemployment number? I mean, we've now taken back the range from 2 days, 2 upside days, and good upside days. Volume was good yesterday. Open interest was good. What did we do, though, yesterday? Here's the 30. We had a kind of a P shape, which would indicate short covering, but we added open interest. So we got a whole bunch of new longs up here that are currently in pain. We opened with overnight inventory that was short, and boy, they're still getting paid. So now, well, where are we going? I mean, we could repair some of this profile, if not all the way down to this naked point of control down here. A lot of this is going to center on this area right here, this between the last week's high and our weekly kickoff high gives opportunity to limit risk. What does the TPO chart look like yesterday? So we had some holes in the A period here, but it's a double distribution trend day, excess high, low excess low, not a weak low, just not a lot of excess there. The market opens and tanks. So yeah, this, if we spend some time in here, I would look for the market to come all the way down and check this assumed point of control in this lower distribution from our double distribution trend day from Tuesday. Yes. Haggle matters. I don't know why they decided to send the weekly kickoff email on Mondays. I will let them know about your thought there. So Euro still range bound, testing to last week's low here this morning, adding 2,400 in open interest yesterday. For 2 days, the market did nothing as far as adding or subtracting open interest on this up move. Yesterday, we added 2,400. Maybe some shorts up here. At least the open interest is waking up and bringing some new energy into this market. But again, we're still range bound, and as of this morning, relatively centrally located. Here's the 30-minute chart. So no overnight inventory until after the number came out. We're seeing some sellers coming in, taking us to really a kind of a support level for the week here. We've got our weekly, last week's low here and weekly kickoff low here. Matthew, weekly kickoff low would be the close of the previous week candle. No, what I do is, the weekly kickoff is not necessarily a previous week's low or high. Those are levels that I calculate on Fridays, and they're levels where I expect longer time frame traders to be forced really to adjust inventories. And sometimes I really nail them, sometimes not so much. But we nailed a couple of them this week, so that's a good week for the weekly kickoff levels. We pretty much nailed the high in the S&Ps this week. So but they're just again levels that I think longer time frame traders will adjust inventory. Trading for Animals loves his levels. Already 200 in profits before the market opened. Not bragging, but I've been through hell and back for 3 years to dissect the charts myself. Nice job, Trading for Animals. Very good to hear. Open interest numbers, you quote. They're coming from here. I'm going to answer some more questions this morning because there's no make hog money or anything. So this bulletin right here. So I'm going to copy this and I'll put it in the chat. So this is where I get them. This is the CME Daily Bulletin. So if I'm looking for equities, go to Equity and Index Futures. Now you'll see this is preliminary. The only thing that is iffy on this sheet here most of the time is open interest. About 9:30, they'll come out with the final, and then it will have the absolutely correct open interest. And it's usually not too far off from what the preliminary is. But when I'm looking at open interest and volume, I look at the total E-mini S&P futures, volume here, open interest here. Now there's a reason for that, and it's more like in crude oil, because the crude oil trades 10 years into the future and it rolls every month. Look at the open interest over for the next 6, 8, 12 months. It's huge. So if I'm only looking at the front month with a rollover every month, then I'm missing some of the picture. And it's a kind of a blurry picture in crude oil because we don't know what months are increasing or decreasing really in open interest when we look at the bottom here. But because it rolls over every month, I have to take the totals down here as far as volume and open interest are concerned. Okay, so you've got the link. Now you can check out the open interest when you want. And there's more information that I can give you about open interest, but if you are serious about learning more about it, Stephen, come to group coaching on Monday and ask about it. I'll show you how I collect and organize that information. And we can even show you an example of how powerful it can be. Watching open interest, volume, delta, there's periods of time when it doesn't really say much, and there's periods of time when it really does. And, it may be a month or 2 months, 6 months before you really get a clear picture of something that lines up in the example that I can show you. But when it does, it's a powerful signal, and at the very least, it can keep you out of trouble. So back to the euro. Test basically to last week's low. Here's the TPO chart. So a normal variation day, IB extreme high, prominent point of control. A lot of facilitation of trade occurred here yesterday. The market's likely to go looking for different areas to facilitate trade. It may have used it up. So we look for probably a test to point of control, maybe a test to this volume point of control down here to finish and close out or repair this profile. How about the 10-year? So the 10-year has been not really big as far as open interest in either direction. I think we've added some open interest over the last couple of sessions, including 25,000 new contracts yesterday on an overlapping to higher range. with the employment number came out, there I'm sure is the implication that they may not slow the roll of interest rate hikes now. There will be another unemployment rate day before the next meeting, I believe. So they'll get more information. But this week we really got some good information about how robust the jobs situation is here. So it may keep things a little bit on the higher rate side, maybe. So volume and open interest increased yesterday. We had some naysayers come in. Here's the 30-minute chart. So move to the upside, I believe, is still where most of the open interest came in as new longs. Overnight inventory to the short side, the number comes out, we test lower. Is there an implication of higher rates in that? Spike on TS Trader, if you're using TS Trader, you can get what they call Tiki cumulative delta line. Now, when you look at this, you can go with session or overall chart. I go with session, and I start the cumulative delta a half an hour before the regular trading hour open. It's where it's, for some reason, how it's the most accurate. So if we're looking here, you can see the delta, you can see the zero line, you can show the value of both. Here's the current delta in the 10-year, negative 19,000. Right. All right. What about the TPO chart here? So this is a excess on this high. This is also excess. This market does not provide huge excess, it seems. We've always got poor lows, poor highs all over the place. So the excess high here is a little bit concerning. And of course, we've got the market moving lower already. If we start to accept even lower than this, we could repair Tuesday's double distribution trend day. Right now, it's seeming like the market is more apt to go back up and test up to the point of control here. It's tested this one. It's kind of heading in the other direction. I don't trade the 10-year. I'm not smart enough. And here is the natural gas. I had a request this week of looking into silver, and I'm going to do some considerable research. And I'm probably going to take nat gas off and add silver. Let me know what you guys think of that. So, adding 7,700 yesterday on a push down, volume was relatively low, but the open interest continues to fuel this auction to the downside. Although with the volume kind of falling off, I'm looking at a grade of about a B for our downside auction here. It seems to be maybe getting a little cheap. Here's the 30-minute chart. Overnight inventory, no. Auction to the downside, relatively organized. We do have naked points of control here, 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 here. So is it really that organized? It's stepping down day by day and increasing in open interest. So the auction is still good to the downside. I'm going to be looking at weekly kickoff low as a market state breaker on this. All right, TPO chart. A big, wide point of control here. This market is used up a lot of facilitation here, a lot of liquidity, a lot of facilitation. Where's the liquidity going now? Look at all the visuals up above. Who would have thought at the beginning of this winter that we would see natural gas at $2? $2. Unbelievable. So, well, anyways, that's a brief look at the context of these markets here for us on a Friday. I think we did gold. Did I miss it? Yeah, I think we did. Yeah. Yeah, we had, a relatively good upside auction in gold for the better part of the week, but really getting whacked now. So I'm kind of looking here at, this is the daily chart. So I'm kind of looking here at weekly kickoff, this area between last week's high and weekly kickoff as an interesting area for an execution. It's a little bit rich if I'm going to try and limit my risk, but at least it gives me that opportunity. Chris would like to see both silver and natural gas. Well, we'll see what we can do. We are going to be expanding the time when Top Step TV starts. That's hopefully going to be starting very soon. I've been teasing it for a while, and it's taking a while for us to get to fruition with that, but it is coming, and I'm looking forward to having the opportunity to spend even a little bit more time with all of you, and I look forward to seeing you there. All right, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. If you start to lose your marbles, get up and walk away. Don't lose any money. It's okay to lose your marbles a little bit, but try and get yourself back to center, as Joe D said, harmonious with the market before you try and get back in. We won't see you for the rest of the day today, so have a wonderful weekend. Rooster, love those babies, love your wife, love each other, be kind to each other, be kind to yourselves. Say a prayer for peace. Blessings to you all, and I look forward to seeing you back here on Monday morning at 7:45. Have a great trading day, have a wonderful weekend, and I'll see you then. Bye now.